and welcome to the FI Newscast, where we bring you relevant news in the food and beverage industry. Today is Friday, April 7th, 2023. We have a great show for you today. Our special guest is 𝗟𝗲𝘁𝗀𝘁, senior analyst at Bloomberg Intelligence. It's going to be a great chat. But first, we're going to cover some of the top stories from this week that we think are worth a second look. We start off with updates on the world's economic status. The World Trade Organization came out with a 2023 GDP projection of 2.4%. That's a decrease from last year's actual growth rate of 3%. The lingering effects of COVID and geopolitical tensions, such as the continuing war in Ukraine, were the main factors affecting both last year's performance and this year's prediction. Looking forward to 2024, you see a slight uptick in their 2.6% projection, but they say the outcome is still dependent on international conflict, food shortages, and any sudden monetary fallout. We also can't forget OPEC's surprise oil cutoff of 1.1 million barrels a day. That's sure to affect gas prices and production costs. On the domestic front, the U.S. seems to be persevering compared to the rest of the world. The ADP reports that private sector employment went up by 145,000 jobs in the month of March. If you look at the breakdown by sector, the leisure hospitality group was the big winner, growing by about 98,000 jobs last month. Annual pay was up 6.9% year over year, a statistic that went down from the 7.2% average in February. ADP chief economist Neela Richardson said that, quote, employers are pulling back from a year of strong hiring, and pay growth after a 3-month plateau is inching down. And it seems like you are starting to see that slowing of growth in the job sector starting now. McDonald's Corp suddenly closed its headquarters earlier this week in the US and Europe and have announced layoffs in an effort to restructure. In an internal email, the company had asked employees to work from home this week. While the layoffs are certain, the numbers of jobs to be cut is still unknown. Similar happenings for Walmart as well regarding jobs. The retail giant recently announced they will cut 2,000 jobs across 5 of its domestic e-commerce fulfillment centers, according to regulatory documents. At a facility in Fort Worth, Texas, more than 1,000 jobs will be eliminated. At the same time, the company has announced plans to make it 65% of its stores to be automated by the end of fiscal year 2026. On a related note, they'll have one less company to give them competition as online retailer Boxed filed Chapter 11 bankruptcy on Sunday. In earnings news, ConAgra delivers strong results as they report Q3 fiscal year 2023 numbers. The CPG maven reported nearly 6% increase of net sales for the quarter, with adjusted EPS going up by 31%. This is the 4th time in a row that the EPS has beaten estimates. President and CEO Sean Connolly was pleased with the company's performance and attributed the success to their improvement on productivity levels and quality of service. Experts will be continuing to monitor the company's activity as inflation creeps more and more into the market space. And in the dairy industry, shocking news about eggs. Production company Cal-Maine Foods had a more than 700% rise in profits in the past quarter. Cal-Maine Foods is the top egg producer in the U.S., and the sharp increase of egg prices likely contributed to the sudden upswing. The company sold nearly 300,000 dozen egg cartons at an average wholesale price of $3.30. Despite denials from Cal-Maine CEO Sherman Miller, some top lawmakers on Capitol Hill wondered if the rise in profits was caused by price gouging. And those are your top stories. We're going to turn now to our special guest. She is a senior analyst for Bloomberg Intelligence, specializing in food retail, mass merchants, and the CPG market. She comes to us with more than 20 years of experience in financial markets. She is 𝗟𝗲𝘁𝗀𝘁𝗀. Jennifer, welcome to the show. Thanks for joining us today.
Thank you so much for having me. I'm delighted to be here.
All right. Okay. First, we got a lot to cover, but I want to ask you first off, you are an expert in looking at the food and beverage industry, markets-wise, finance-wise, but tell me, when you are up against it, when you've had a long day, what is your go-to comfort food?
I would have to say macaroni and cheese. I think that's a go-to comfort food for a lot of people out there. And the good news is that it's easy to make, it's not too expensive, and it does give you that sense of your childhood.
Well said. I think you just made Kraft stock go up. I'm just kidding. Anyway, let's get right into it. Jennifer, I would love to get your insights on the current events that we've just covered. First off, the WTO's GDP projection. What are your thoughts on that? And What do you think that means for the food and beverage space, food industry wise?
Well, I think it's encouraging that there's at least slight growth with regards to the GDP forecast. But when it comes to the food and beverage industry, a lot of planning and a lot of forecasts that happen are based off of GDP growth. And so when that growth is slower than historical paces, or that it's only kind of a moderate increase from what we've seen in the last year or two, that's where it can affect, how these companies are planning from a capital spending, perspective, from a manufacturing perspective, and what, how they're estimating what demand is going to be. And so, it also can then play through to things like innovation, and how much are they willing to risk if they aren't expecting to see a big uptake in demand.
All right, moving on to the ADP jobs report. Jennifer, what are you seeing from where you stand? It seemed a little encouraging seeing the uptick of jobs, even though there was a slight decline in general. But what happened in terms of the food and beverage industry, and what implications are there moving forward in terms of jobs in the food industry?
Yeah, so we agree that it was actually very positive to see that there's still job growth happening. But when we take a little bit longer view, the growth is a little bit lower. So there's a sequential decline in the jobs that are being created. And with regards to the food industry, we saw a huge number of people come into the industry during the pandemic, and companies really hired a lot to help with supply chain, to help with manufacturing, and to help make sure that people got the products that they needed. And now we're starting to see where some of those jobs in terms of cost cutting are going to start to go away. It's not immediate, but we do think as the year progresses, we're going to see companies really focus in on cutting costs, right-sizing the size of their operation to manage current volume levels. And that will impact the jobs report and jobs in the industry as we go forward.
All right, moving on to ConAgra, fourth time in a row that their EPS went up. I mean, what's your take on that, Jennifer? I mean, is inflation a factor? What are your thoughts?
Inflation is still the friend of a lot of the packaged food companies, especially because it's helping drive outsized top line growth. So from a revenue perspective, they're definitely benefiting from price increases that have already been put out into play. And they've been able to really benefit from the fact that most of our manufacturers are back to normal capacity with regards to what they're manufacturing. With ConAgra, it's a good story. And we do think that there's a potential for some gross margin recovery, but the challenge that the whole industry is going to be facing as the year goes on is that there's an increasing pushback from retailers and from consumers on any additional price hikes. And although some of their cost to make products is coming down, it's not coming down that fast. And so it's going to be very hard for these companies to continue to put price increases through. But at the same time, they're going to need to figure out how they can try to increase volume of goods sold to continue this type of earnings momentum that we've seen.
Moving on to those astronomical egg prices, egg profits over at Cal-Maine. What's your take on that news?
Well, I do think that, investigations into price fixing seem a little bit of a stretch. Egg prices are high. They're not as high as they were, but they are still much higher than they typically are. And that came through with the average selling price being almost, double what it had been just a year ago. But the avian flu is a big driver of that because the number of egg-laying hens has just been decimated. And until that stock rebuilds, we're in for continued higher egg prices. Now, Cal-Maine is the largest egg producer, is obviously going to benefit from that. But what's been an interesting thing that we've seen is that we've seen increased trial of alternative egg products, such as plant-based eggs. And so one of the key drivers for plant-based adoption has always been price parity. And with the elevated price of eggs, we're seeing consumers actually look into some of those alternative products at a higher frequency than they had been before.
And finally, taking a look at those Walmart job cuts as well, McDonald's expecting layoffs, but particularly with Walmart and their almost simultaneous announcement of, automation, they want 65% of their stores to become automated in a few years. Jennifer, what are you seeing in terms of that trend, automation, maybe even robotics, AI? Are we going to see that continued shift into, a more technological integration when it comes to food and beverage companies?
Absolutely. Automation is going to be the path forward for a lot of these companies. We've been in an environment for the last several years where the cost of labor is going up. Retention rates are down. It's harder to keep people engaged. And there's a huge opportunity in automation, not just to eliminate positions, but to make positions better. And so if you think about in a meat processing facility, being able to take some of the worst jobs and have them done by automation, that's huge. When it comes to large retailers like Walmart, being able to speed up the fulfillment process, getting things to customers better, it's a customer service angle. It's also a cost savings angle. And that is the way of the future. Now, there are going to be short-term job cuts, but I think the goal of a lot of these companies is to be able to retrain or to offer more interesting positions to people, or to have them available to interact with customers more, rather than just be focused on doing manual labor.
That's a great point. All right, Jennifer, thanks so much for those insights. We're going to take a quick break, but when we come back, we're going to have more with Jennifer Bartashus of Bloomberg Intelligence. Stay with us. We are back with Jennifer Bartashus, Senior Analyst of Bloomberg Intelligence. Let's get right back into it. Jennifer, let's talk about lab-cultured meat. It's been in the headlines recently, not going away anytime soon. A lot of people are talking about it. What are you seeing from where you are?
It's a fascinating area, and it's very exciting because in November, Upside Foods passed the first hurdle with the FDA in order to be able to sell a cultured meat product. And Eat Just in the middle of March just got the same approval with the FDA to proceed with their product. And what's so exciting about this, and there's sort of a science fiction type aspect to it of creating meat in a lab. But there are so many interesting parts to this. There's a great story with regards to ESG in terms of just making the planet better by not having to raise all of the crops to feed animals and raising all the animals to feed humans. And if you can bypass part of that, it's a fascinating thing. So we actually were just talking with Josh Tetrick from Eat Just yesterday, and they're already selling this product in Singapore. And so the idea of it coming to the United States by the end of the year or early next year is a really incredible change in the way we think about food and how we can think about sourcing food going forward.
That's really interesting. I want to next cover consumers, especially from a geographical perspective. You said you had some really interesting findings about looking into the rural versus urban versus the suburban consumer. What do you have for us there?
Yeah, we actually did a proprietary consumer survey where we were looking at how rural shoppers behave versus people who live in suburban or urban areas. One of the things that we asked people was about inflation. And we asked people, how much do you agree or disagree with the statement that inflation has had a negative impact on my personal finances? And one of the most interesting outcomes of this study was that rural customers feel that inflation pinch less than anybody who's in the suburban and urban markets. So 65% of rural consumers said that they agreed that inflation was hurting their personal finances, but that was over 73% in the suburban and urban markets. So a big difference in consumer perception about inflation and how it's impacting their daily lives. And what we're also seeing out of that consumer base is that they're very loyal. So once a brand or a retailer wins their loyalty, they tend to keep that loyalty and keep it over the long term. So they're very high value customers once you get them in your ecosystem. And finally, the other interesting thing was with regards to digital coupons and the fact that, people actually love getting these coupons and are much more interactive than people who are in the urban and the suburban areas. And so for a new area in terms of retail media networks and where CPG brands are looking to connect directly with consumers, it's very interesting that that particular consumer cohort is particularly responsive to those types of ads and offerings.
Love that you mentioned retail media networks. That is a landscape that companies are definitely trying to take advantage of. I want to shift gears, go back to the CPG space. We mentioned the news about ConAgra before. Jennifer, what are you seeing in terms of the challenges, the issues, the successes surrounding the CPG industry right now?
It's a really interesting time for CPG because we've seen so much tremendous growth in the last couple of years. And we've seen companies just blow through earnings and have great results that have really kind of been very compelling. But we're at a point now where we see almost a tipping point. And that tipping point is that when you look at where the growth is, volumes being sold, when we look at IRI data, and we look at it on a monthly basis all the time for across the entire CPG industry, the problem we're seeing is that volumes are down. And when volumes are down, you have to then resort to other tactics to try to bring them up. So the companies have been really reliant on price increases. That's been great for results. But now we're going into a phase where people are going to have to be very focused on costs. And we're expecting another sort of year or two cycle of cost reduction across the organizations. And are going to need to increase spending somehow to push volumes back up. And so that translates into more marketing and media spending. That translates into having to have bigger promotions. And so a highly promotional environment, especially with consumers who are struggling, is not always the best environment for a CPG company to be in. But that's where we see things going at the moment, with consumers a little bit under pressure, a potential recession on the horizon, and the fact that there's not going to be a lot of room to put more price increases through to help propel results.
Finally, I want to get your take, Jennifer, on an issue that is probably on the minds of many Americans, the expiring SNAP benefits. What are some consequences of that in terms of the food space?
Well, when you talk about food retailers, that can have a meaningful impact on their actual sales. The expiration of the extra SNAP benefits that people had during the pandemic ended on March 31st. And on average across the country, that translates into $95 a month less that recipients are going to be receiving. And so although everybody always has to buy food and everybody has to, feed themselves and feed their family, that is a big difference in a monthly budget and how much people can afford to spend on food. And so one of the impacts we see is that obviously people aren't going to be spending as much. That affects retailers. But also importantly, it forces people to make different choices. And so we've seen people slowly trading into more private label. But with the end of the SNAP benefits, there's a chance that will accelerate, especially in categories where there's very little difference between a national brand and a private label brand. That's an additional risk for the food industry because there are companies that have much higher portfolio exposure to private label than others. And so we'll start to see that flow through and potentially impacting the volumes that I was just talking about even further.
All right, those are some great insights there. Jennifer Bartashus, Senior Analyst of Bloomberg Intelligence. Thank you so much for joining us, Jennifer. Appreciate it.
Thank you so much for having me.
Before we go, we're going to take a look at what's ahead in the food industry in the coming days. On April 11th, Albertsons releases earnings for Q4 fiscal year 2022. On April 12th, the Bureau of Labor Statistics presents the latest consumer price index and real earnings. And on April 13th, the BLS releases the latest producer price index. And on April 14th, the Census Bureau releases their monthly retail sales report. And that is our show. Thanks so much for joining us. Special thanks to Jennifer Bartashus of Bloomberg Intelligence. Please tune in next week, same time, same place, when our guest will be Kristen Walters, partner of Mazars US. She's going to give us all her insights on what she is seeing in the food and beverage industry from a consulting perspective. Don't want to miss out on that. But until then, have a great weekend and take care.